So you're in Canada and saw the crazy inflation we have had over the last 2 years. And although it's coming down now, you want to start investing your money to build a sustainable path to wealth. Or you want to start investing to become more financially independent and have more options in life. And now you don't know where to begin. Well, this video is for you. I know what it feels like because after I moved to Canada in 2019, I found myself in the same shoes after a few months. Before we begin, my name is Rohan and over the last few years, I've spent thousands of hours learning about personal finance and investing. Now I'm sharing some of my learnings to save you some time and fast track your financial journey. With that out of the way, let's get to the topic. Let's say you have established your reasons for investing. You also set up an emergency fund, have your savings in order, and are taking full advantage of any employer contribution towards your retirement. What's the first step to getting started investing on your own? It's to find a good investing platform. When you're getting started, here are some key things to remember when selecting the platform. The fees and commission they charge, the investment options they offer, ease of use. You don't want to get too overwhelmed but also not go with a platform that lacks basic features. And finally, what kind of accounts are they offering? Luckily for us in Canada, there are plenty of options. Some of these include Questrade, TD Direct Investing, Wealthsimple, Interactive Brokers, and more. They're all pretty great platforms. However, in my opinion, the best platform for starters is undoubtedly Wealthsimple. I call it the Robinhood of Canada. It has a pretty neat design and great features. Some of the things that stand out to me are, it's available on web, iOS and Android. It offers zero free trading for stocks and ETFs. There is no minimum investment required to get started. Definitely a standout feature. You can literally get started with $1. So no more I don't have enough money excuses. You have access to most Canadian stocks and ETFs, but that's not all. You can also tap into the American markets. Think Tesla, Nvidia, Palantir, Apple and more. In general, they have support for these four major exchanges. They not only offer personal investment accounts, but also have the registered Canadian investment accounts, your RRSP, TFSA and FHSA. We will look at these in part 2 of the video. Let's quickly look at how you can set up your Wealthsimple account. So we start off on the website, beautiful clean website, click on Get Started. You'll be taken to a screen that prompts you to download the Wealthsimple app or sign up on the web. Wealthsimple on iOS and Android are pretty great. I've tried the app on both the platforms. They work smoothly and offer all the features that you need. But for the purpose of this video, let's start with sign up on the web. You'll be taken to a screen where you'll be prompted to provide your email ID and create a password and then hit sign up. Once you're in, you'll be prompted with all the products that Wealthsimple offers. We can see invest, trade, tax, cash and crypto. For the purpose of self-directed investing, we are going to start with trade. You will be asked to go through a couple of steps and they'll collect some information for tax purposes in case that's needed. Honestly, the sign-up process is pretty straightforward and you should not have any issues. Once you're in, you'll be greeted with a personal trading or investment account. However, I highly recommend starting with one of the registered investment accounts. These accounts are your TFSA, RRSP and FHSA. You can proceed to select and create these accounts. It's just a few steps and it should be set up in no time. But this brings us to part 2 of the video. What are these accounts that are available to us? The Canadian government has a few registered investment accounts for us. They come with their own rules and tax benefits. First is RRSP or Registered Retirement Savings Plan. This is designed to help Canadians save for their retirement. It allows individuals to contribute money to this account for investing and saving purposes. All contributions are tax deductible and growth tax free until you start using the money in your retirement. Second is your TFSA or tax-free savings account. It is a financial account available to Canadian residents for investing and saving. The key advantage of this account is that you can invest, but there are no capital gains taxes on the growth of your money. The third is FHSA or First Home Savings Account. This account was introduced by the Canadian government this year, but it's already available on Wealthsimple. This year onwards, you can contribute $8,000 into this account for saving and investing. And as long as later, the money from this account goes towards your first home, all contributions are tax deductible and growth tax free. Basically gives you the merits of both the RRSP and TFSA. It's slowly becoming my favorite account. Finally, we have the personal investment account. This is neither tax deductible nor tax free and has no special purpose. You can put money into this, invest, but as soon as you sell or receive dividends, it's taxed immediately. By the way, I recently made in-depth videos on RRSP, TFSA and FHSA. You can find it on my channel and I'll also leave the links in the description. There are a lot of details involved when using these accounts, so make sure to check out the videos or read the official documentation provided by the government. Now we know what the main accounts are, but which is the right one to start investing? Well, like most things in life, it depends. The two main factors that influence this decision are, first, the purpose for investing. For example, if it's for the long term and you want to make investments for security in your retirement, RRSP might be the first account you should look at. Or if you're investing to save money for your first home, FHSA might be the first account to look at. The second factor is need for liquidity. In an ideal situation, you would not be investing money that you might need in the short run or in an emergency. However, if this is a concern, you might want to look at your TFSA or the personal account first. Make sure to know the consequences of withdrawing money from your TFSA and any taxes that might apply to your personal accounts. For me, at the age of 31, this is the priority order. FHSA and RRSP come first and are pretty much equal. Next comes the TFSA and then comes the personal account only if I have money left to invest. Again, this is subjective and based on what I need to prioritize in my life right now. This is a good time to highlight that I'm in no way capable of giving financial advice and this video is for information purposes only. Please take the time to draw out a well thought out plan for yourselves, and if things get really complicated, please consult a financial advisor. So we are all set up and even have a grasp of all the accounts we just spoke about. You know what time it is? It's time to make your first investment. Ideally, you should start by investing stocks and ETFs that align with your investment goals and risk tolerance. To do this, you'll have to dive into financial news, market trends, company information, and more. Yes, all this sounds complicated, and it is. So let me tell you where I started. I started with these two ETFs. First, Vanguard US Total Market Index, ticker symbol VUN. Second, Vanguard S&P 500 Index ETF, ticker symbol VFV. VFV is the Vanguard ETF that follows the S&P 500, which tracks the performance of the 500 largest companies listed on the stock exchanges in the US. On the other hand, VUN tracks the entire US stock market. A good reason to start with VFV and VUN is that historically they have annualized a return of over 10%. They are largely considered the safest passive investment strategy for retail investors like you and me. Here's something awesome to note. In part 2, I mentioned that Wealthsimple offers fractional trading. This means that even though one stock of VFE costs over $100 while VUN costs around $80, you don't need that much to start investing. This is because you don't need to buy one full share, you can buy a fraction. Let me quickly show you how. This is my Wealthsimple account. I'll go to VFV and now I'll select fractional buy. Now I can tell them how much money I want to buy with. Let's put in $50 and hit buy. The order will execute and now I'll own a fraction of VFV. Of course, you don't need to continue buying these, which brings us to the last key point. Monitor your investments and build a good long-term strategy. Investing is not a one-time activity and requires ongoing attention and strategy refinement. Once you start investing, monitor your investments to ensure that they are still aligned with your financial goals. Learn about the industries, different companies, and market trends to figure out how to build a diversified portfolio. You can always stick to an ETF-based portfolio. In general, a good strategy includes a mix of different assets: stocks, bond, gold, cash, and for some even Bitcoin. My approach was to start with the safest investments, learn as much as I can about the next investment, and slowly ease into it. Diving headfirst into an investment is more likely to end in pain. Don't worry, you'll find your investment style over time. My only advice is to not listen to online influencers blindly and do your own research. You're always welcome to find good analysts and news sources online. However, I believe that no one truly knows where the market is headed in the short term, so take everything you hear with a grain of salt. Remember, building a successful investment strategy takes time and discipline, but it can help you achieve your financial goals over the long run. Hope you liked the video. Keep learning and stay on top of your finances. Until next time.